Good afternoon, ladies and gentlemen. Welcome to our Thursday webinar, yet another week, the second week of March. Remember, every Thursday, we have these special webinars organized for you to give you more insights into your trading and keep on improving your skills and making you a better trader each day. As we move along, if you have any questions, remember to type the question over and we will look at it towards the end of this session. My name is Matthew. Welcome all. Today we are looking at the mistakes that you need to avoid in your trading. Remember, it's very important to understand how to trade, get the skills. We always tell you to attend our classes, learn the skills, practice, and you know how to use it in your trading. But now, there's one very important thing. How do you maintain consistency in your trading? Because along your trading, there are things that derail you, the mistakes that start creeping into your trading. They derail your trading. And that's what we want to look at today and see how you can work on them and keep getting better. I see we have attendees who have concerns about the audio. I hope you can hear me clearly. Please give me a yes. If you cannot hear me, make sure that you enable your audio or you join with audio so that you can hear. Give me a yes if you can hear me clearly. All right, thank you so much, Anthony. Thank you so much, Christine. And here we proceed. Let's check out on these aspects. So at the beginning, you find that the traders have a challenge of finding the opportunities in the market. Okay, it's changing very fast. The candlestick going up and down. You can't find a trend, but of course you have tools that you can use, and once you practice over time, you can get the trends, you can get good opportunities in the market. So it requires focus to separate market action from emotional response. Once you're trading and you're getting very nice trades, all of a sudden you realize that over time bad practices start to creep in and they make you lose the focus you have in the market, make you start losing in the market. You cannot control the market, but you can control when you buy and when you sell, and the emotions or the responses that get into your mind or into your trading alongside. So to understand how to trade and how not to trade, it's important that you understand the pitfalls that can make you fail in implementing your trading strategy or keeping you successful in your trading. And these pitfalls will include trading without a strategy. So what is a strategy in the first place? A strategy is just a set of rules that help you to know the best time to buy, where to place a stop loss, where to put a take profit. Just the rules to guide you on entry and exit of a trade. So it helps you very well in if you have a trading strategy, it helps you in succeeding in your trading, helps you in saving time when you're analyzing the market. You need a straightforward trading strategy. A strategy separates a trading from a gambling kind of engagement in the markets. So if you're using a strategy, you know clearly where you should be buying, where you should be stopping your losses, and what amount are you putting at stake. That is trading. As compared to gambling is when you're just entering into the market, you don't know why you're buying, you don't know why you're selling, you're just getting to the market just to make sure you're trading. That is one of the mistakes. So make sure you have a trading strategy. Define your goals, and that will help you achieve your trading objectives. So if you don't have a strategy, that's a mistake number one. Make sure you can get hold of a strategy. And the path to getting a trading strategy is practicing over time using all those indicators and various tools in the market. Practice and see which one is easy. You can see on the screen we are talking about straightforward, something very easy for you, something that you can follow without a lot of stress, without a lot of struggling to find out or interpret what you're using. Use very simple indicators, simple tools, and that strategy should help you to achieve. If you don't have something like a strategy, simple strategy that's straightforward, then you need to work on it. Don't trade against the market trend. Learn to identify a trend as a trader. There's this old saying that trend is your friend until it ends. So most of the tools in the market will help you to identify a trend, whether you are a price action type of a person, you're using support and resistance, you're using other indicators, maybe moving averages, you're in one way or another, you're trying to pick out on a trend and so that you follow it. So yes, we have different strategies that you can use. Some people would want to pick the market at the top, selling at the top. Some people want to pick the market at the bottoms, buying at the bottoms. Yeah, the guys who are keen on overbought, oversold levels. Well, um, you might be trading the market the wrong way, but you're getting the profits. But whichever trading strategy you have, make sure that at least you can note where you have a strategy. Know when to expect a trend reversal. Get an opportunity to jump in for trend continuation if that's something that you trade on. Avoid picking the tops, right, and the bottoms, unless if it's part of your strategy, because again, I've mentioned there are people who would want to buy at oversold levels, sell at overbought levels, and of course, make sure you understand the risk associated with that one. And if you're picking up those high and lows of the markets, you need to note what's happening on the higher time frames. For the guys who are using overbought, oversold levels, note higher time frames, what's really happening. You might be picking an overbought level or an oversold level on a very low time frame, and when you check out on a higher time frame, it's just a change from a bearish market to a bullish market, or bullish market to a bearish market. So it's very important. Don't trade against the trend. Use appropriate tools to identify and confirm trends. That's very important. So make sure you can identify the trend, follow the trend. If it's an uptrend, downtrend, or sideways or a ranging market, make sure you can know it very well, and then you can successfully use your trading strategy when you already know the market movements. This is very common, and any education platform or anyone who is teaching you trading, they need to tell you that use a stop loss and use a take profit. It's just like if you're targeting something, for example, let's talk of archery. You're trying to shoot, you're shooting, targeting a point, right? Or guys who play darts, if you know darts, or anything that you're doing, you have an objective. The same case in Forex trading. When you're talking about a take profit, it's your target. You're buying or selling the market because you're expecting the price to move from a specific level to a given level. So you have a target. At the same time, remember there's risk in the market. You need to know where can you get out in case the things don't go well for you. Again, this analogy here of driving at top speed without brakes or without even a defined destination, you won't dare get your car out of your garage or wherever you are if you don't know where you're going. You have a destination already, and that's the case for a take profit. The same case, if you're on a road and you're driving, then you won't dare step on that pedal to hit a high speed if you don't know you have good brakes. The same case for a stop loss. So have predefined entry and exit levels in every trade. And I won't miss to mention that at the stop loss level, don't risk something bigger than you can afford to lose. It's usually advisable, don't risk more than 2% of your trading capital. But again, it depends with your risk appetite. There are people who are willing to risk something bigger out of your capital, right? So if you have a bigger risk appetite, again, you can select a bigger percentage, but it should not be quite a big percentage because you're going to erode your capital. In trading, it's not about a make it all game in one single trade. And at the same time, it's not a lose it all. You want to be progressive, you want to trade continuously and make profits That's why you have to keep on getting better. That's why you have to keep on getting this information, getting this knowledge, attending these webinars. It's very important. You want to be consistent. And in line with that, don't trade without a stop loss. And even as you're targeting for your profits, make sure it's a reasonable target. Okay. For example, I always say that let your target be pegged to the amount which you're risking. And here we're talking about risk reward ratio. If you come to our classes, we have spoken about that one severally. So make sure that to have a reasonable target, check out on the formation in the market, understand how much you're risking, and then look forward to what is it that you're targeting. That will help you to avoid greed or avoid having unreasonable targets. Because if you don't know what you're looking for, then anything is welcome, anything is okay. If you don't know that you're waiting for $5, then anything's okay. Even $2 is okay. Yeah, even $50 is okay, right? And even getting a loss is okay. That's what it means. Because if you can't lock your small profits, you don't know what you're looking for, then it becomes a disaster. So what will help you in stopping the losses and taking the profit is knowing your targets, but make sure you use them anytime that you're trading. Don't take bigger risks for lower rewards in the markets. All right. Some traders are fond of taking bigger risks, and then of course you're targeting something very small. You place a stop loss at a level where you're losing $20, and when you just get a little bit like $5, then you're very quick to take it. Then that's not sustainable, because at the time that that trade will not follow what you were expecting in the market, then you're sure that it's going to give you a very big loss, which you are not expecting already. So before placing a trade, as a trader, you should not be willing to give a bigger risk, right? Have a higher target as compared to your risk that you're putting in the market. And to make it more clear, your risk is the amount which you're losing at the stop loss level, and your reward is the amount that you're looking forward to get at the take profit level. So how in practice, traders would tend to close profitable trades prematurely. That is, you just taking any profit you have because you don't have a target. You don't know what you're waiting for. It's not good. And sometimes those type of traders are still willing to hang on to losing trades for long, when it's wrong, because you're expecting, well, it might be coming back. It's getting back to the profit side. It's coming back to give you profits. But what's the reason? Because you don't know what is your risk in the market. So you should have predetermined exit levels and let them be. You placed a stop loss, you'll be losing $5, leave it. You have your target, it's $10 that you're targeting, let it be. If it's not hit, it will hit the stop loss, but already you had anticipated those levels even before you place the trade. And to insist more on this, because we're talking about risks and rewards, don't risk more than 2% of your capital. But again, it depends with your appetite in risk. Fear of missing out, FOMO. We will speak about this more in April. I will make sure we cover this topic to highlight more about what fear of missing out is. But this is a situation where, as a trader, you are willing to, you have a desire of getting the experience that another trader is getting or other traders are getting in the market, right? So you're feeling that you're potentially missing out on a golden opportunity in the markets. And this could be maybe because of sudden volatility in the market, and people are already speaking about a very nice trend out there, or you have news that have come up, and other traders are raking in and making profits. If you had not captured that trend or trade at the right time, don't be in a rush. Don't have the fear that you feel you're missing out on a very good trade. Yes, of course you might be, but the market is there. Market is not going anywhere. It remains there. So you have an opportunity of getting another trade. So avoid the fear of missing out. Other things like following signals blindly because they've been offered by an expert, and you feel that this is like 100% correct. No one is 100% correct in the market, right? Don't just use signals blindly. And the way to know whether you're using something blindly is if it's a financial instrument you don't trade on, because of course traders have a habit of selecting financial instruments that they find suitable for them, or the ones that they feel they have a good knowledge on how they can trade. That's what you want to hear more about. But if it's any other financial instrument, you won't be trading on that one, you don't even know about it, and you just want to place trades, then uh, just because you've been given a signal, that's the wrong way, because you don't understand what you are doing. Okay, so another thing is lack of a trading strategy. These things are interrelated. We earlier talked about lack of a trading strategy, and now here speaking about the fear of missing out. Of course, you don't know where to enter a market, and you will rely on other people to help you, or other traders to help you know where to buy or sell, because you don't have a trading strategy. And now it's upon you to keep on making what you are already using, the tools which you're already using, to be better and give you a good trading strategy. I commonly get this question: which is the best trading strategy? Because we learn about different tools in the market, how someone can analyze the market, and in any one given financial instrument, or any given tools or indicators, I will occasionally, many times, get questions about now which is the best way to trade. And my answer is the best strategy, the best financial is the best indicator to use in the market is the one that you've already practiced on, used over and over and over, and you've known the best points and the best market situations to use that skill or that strategy. So have a trading strategy, and that will help you to find trades yourself, and you won't be excited so much when you see someone is getting a lot of profit because they have entered the market, or you had rumors, and fear of missing out will be a thing of the past. You'll be confident in yourself. Revenge trading. This is a situation where you've placed a trade and you've made a loss, right? And you feel now you want to recover your money. You made a big loss, maybe you took a big risk in the market, or you didn't anticipate that move, and you're making a big loss, and then you want to get into the market again and recover the amount which you've lost. Well, that's a very common feeling. We are human beings, right? Our minds are wired in such a way that once you feel pain, you want to recover again with some pleasure, right? And that pleasure is like getting profits back. That thing does not work out. So don't chase after lost money, because that one will make you will influence you to make irrational trading decisions, and you're going to get even bigger and bigger losses. And again, what causes this one? Lack of a trading strategy. Because if you have a trading strategy and you've entered a trade once and it's not working, you're making losses, the next time that you'll be considering to enter a trade, then it must be backed up by your strategy or the rules that you're using in your trading. So revenge trading is when you're trying to recover losses that you've already made in a trade, and that's not okay. I'm not saying that once you make losses you should not work hard to have profits, but avoid like placing a trade immediately after you've lost just because you want to recover. Take some time, see what you can do. Of course, someone gets negative emotions and bad feeling, no one wants to lose, but find something to try get you out of that situation, but don't do revenge trading. There is live to fight another day, right? Don't do revenge trading. Fear, something very negative that can affect your trading in a negative way. And fear is born out of lack of consistency in profitability. You've been trading, you've not been making profits, it's just losses, right? And that one makes you feel that, well, I'm a loser in the markets, and now you want to stop. That's not the case, right? Again, fear will come when you've made a very huge loss on a single trade, or maybe a series of losing trades, and you're now losing your emotional balance. Another way is that you're entering a trade in unreasonably huge lot sizes, and now you realize that there is a potential big loss that you're likely to see on your account. Okay, these are all things that make you start feeling that you're fearing the market. The moment you want to place a trade, you're feeling like you start shivering. Again, that one derails you from becoming a successful trader. Okay, or you feel that you become shaky. These things happen in the market, right? For the people who are beginning to trade, or even you've been trading and you want to make a lot of money, and all of a sudden you find yourself using a big lot size. This mistake can get anyone. Okay, and where it all comes round to risking more than you can afford to lose, right? And not being consistent. So how do you avoid fear? It goes back to a trading strategy. Make sure you have a trading strategy. If it's all about fearing the potential losses, make sure you have a stop loss. And just to repeat myself, before you enter a trade, you should have known the potential places where you want to exit. Have a stop loss level, have a take profit level, which is predefined, so that as you're entering a trade, that is the final thing which you're doing. You're no longer going back trying to like reduce, try to extend the take profit. Then of course you can do that, but again, you want to have a final decision in your trade even before you enter it. Yes, there's sometimes you want to protect your profit by moving the stop loss on trailing your profits, right? By using a trailing stop. That's what I mean. You want to move the stop loss towards the profit side. That's very appropriate. But again, make sure it specs to your risk reward um, trading strategy to lock in your profits. But make sure you have predefined entry level, predefined exits when you're entering the market. Okay. When you lose a single trade, you can again recover. There is no problem. This is a business. Consider it like a business. Okay. And now I've remembered something else. I always ask when I'm chatting with clients and ask them, for example, if you had like $10,000, that's 1 million that you want to invest. How much output are you expecting, like in a month? And someone will say some reasonable amount. But if it comes to forex and you put the same amount of money, now the situation changes. You want to consider this one like get rich quick kind of a thing, and you now want to get more money. Then this one throws you to losing in a single trade because you're using a very big lot size, expecting very big returns all of a sudden. It's not a 1 day affair that you're becoming rich all of a sudden, or maybe losing everything on the flip side. So those things are going to lead you to fear. Try to get away from fear. Make sure you have a trading strategy, and in that one you have uh, lot size that you can use, and how much are you risking in the market, and where are you targeting your profits. Now, greed. This is not a get rich quick scheme. This is a desire to wait for more profits without any supporting indications in the market. Yes, of course, you can keep on riding a trend. So long as it's rising and you want to buy trade, then of course you can keep on getting the profits, locking in your profits all along. If it's a downtrend, the same case, keep on riding the trend, locking in your profits. Yeah, you can keep on getting the profits, but make sure it's supported by indications in the market. Okay, it's very important. But there is a case where a trader assumes that since the price of an asset will keep on rising, or the price will keep on falling, and you are short on that profit and on that financial instrument, and you keep getting the profits. Yes, of course, you might keep on getting profits, but it has to be backed up. You need to have a strategy to lock that one in, right? Maybe if it's a trailing stop, keep locking it in, right? And sometimes when you're not sure um, of the movement of the market and you're all of a sudden getting profits, you need to have a way of knowing what you expect. Don't be guided by greed. So you need to have a way of locking in your profits in time. Know how to time the market. In other cases, you may be tempted to add to a losing position, commonly known as hedging. Okay, without any solid justification, just because you have a trade which is losing and now you want to get it back. It's always good to know when to get out. Okay, or because the market is moving in your favor and you find yourself buying the same financial instruments over and over and over, overexposing yourself because You don't know what you want already. So it's always, that's human nature, by the way. We all want to get as much, but we need to have control to how much can we keep on anticipating getting more and more and more. Forex is like a business. Consider it so. Have a target. What are you expecting in the market? That one will keep you from getting greedy. So that if you've entered in a market and in every day maybe you're targeting, if you get like $50, you're good. It is something that you can admire to have. If you had a business outside there, if you made $50, which is 5,000, you will be okay with it. Why not have the same kind of an aspiration in Forex and actually implement it? So avoid greed in the market. Consider this like any other business outside there. The way you will have an automatic, you will have an expectation in your business outside there, have the same expectation, have a realistic target in trading as well. So avoid greed. And representative bias, again, this is where you're confusing reality, you're confusing what's happening in the market, the real market movements, with the actual, with what has similarly happened in the past. We talk about breakouts. We talk about retest of the market. But you see, the market structure is always different. So don't seek to replicate previous successful trade setups because that's what you trade. For example, here what you're saying is you're not going to drop your trading strategy. If you're someone who waits for a trader who waits for breakouts, yes, of course, wait for your breakouts. If you're someone who trades with volatility and you're waiting to see when it's a drop of volatility, then a rise of volatility, use it. But again, you need to adopt trade setups. Market is dynamic, adapt trade setups. What I mean by adapting trade setups is understand the structure that you're waiting for. In that breakout, do you really understand why is it that you're getting a breakout? Do you really know that it is a shift between strong selling volumes and strong selling activity, and now it is shifting from a strong selling activity to a strong buying activity? And do you understand that we're talking about technical levels, or maybe a change now from big selling volumes, now it's changing to big buying volumes? And at what technical levels are you going to have that shift, so that you're not just waiting for the price to cross a certain level? You actually understand it's a zone. So avoid trying to trade similarity, but get back to probability, right? Adapt a trading setup. And that's where the difference comes in between the successful traders and the ones who always complain. You find yourself, you're complaining that, well, I'm using moving averages and the crossover doesn't work these days. Maybe it's because you're not timing it well. Okay, you're not timing it well. You're not waiting. You don't know specifically what you're waiting for. So make sure you have a way of confirming your trades. Adapt the trade setups. Basically, all the things that you learn in Forex, they work, including the simplest ones like moving averages, like the pin bar, like a breakout of a trend line. And they are very common in the market. The question is, do you really understand the best levels that you should be getting in or getting out? That's what makes the difference. That's what I mean by adapting the trade setups, because the market structure is different. Again, whatever the setup happened yesterday, whether it was on an uptrend, it will be different. Anticipate a different market, so that anytime you're entering into a trade, you are going to treat any trade like an independent market setup with independent market moves, and different structures and different news are playing out to that one, and get the right um, entry and manage your trade very well. Avoid representative bias. It's not about similarity, it's about probability. Know the setup. You're implementing your setup, you're implementing your trading strategy according to the trade setups, and it is based on what you've really understood on the shift from buying to selling activities in the market. Euphoria. How do you feel when you win? How do you feel when you've placed a trade and you really got a very nice profit? Happy, right? Of course, everyone wants profit in the market. I also like getting profits. Okay. And when I get a loss, I don't feel so good. So this is about how do you feel when you get a profit? How does it influence you moving to the next trade? So euphoria is a state of extreme excitement. You're feeling confident. Of course, you've been winning trades. Now you feel you are a strong trader in the market. You are a good trade rider in the market, or you like trading with price action. Become overly confident. Okay, confidence is not bad. It's good to be confident. All right, profit is not bad. It's good to get profit. That's what we're looking for. Yeah, you're looking for success over and over and over. But now here a challenge comes in. You realize that the moment you start, the time that you make big losses is the time that you've really understood how to trade. And now you're very confident and you've been a winning trader. Okay. You realize that when you were starting out to trade, you were losing in small amount of money, like $5. You're wiping an account of $50. Well, it's 5,000. Huh? And after sometimes you get hold of your trading strategy and you have like $10,000 in your account or $1,000 in your account. You're getting like $50 every day, $100 every day, and now you forget. You become overconfident. You're very happy. You have that overconfidence. That's why the mistake starts coming in. No wonder traders who are really experienced are the ones who have biggest losing periods in the market. And you want to um, overturn that and make sure you are consistent in your trading. So you need to understand yourself. Yes, you get profits, you're happy. How does it influence your next trade? And for you to avoid this and make sure that you have a winning trade, again, consider that one like past tense. Analyze the other market structure like a way new, different opportunity for you. So traders need to wait for the market to present the right trade setups. Don't just enter trades out of excitement. Just because you've won the last trade doesn't mean that you can win the next one. No, we can always be wrong because the market is always right. So make sure you're implementing your trading strategy. That's what is guiding you to placing a trade, whether you're winning or losing. Follow a trading strategy. Now, opposite of that, negativity bias. When you lose, of course, you feel very bad. You have a negative emotion and becomes difficult to focus. You've lost a lot of money. And then, boom, you're caught up in a negative emotion. And you even want to scrap away or scrap out your whole strategy because it's not working. Instead of doing that, you need to learn from it. Okay. Maybe it's because you had a wrong entry and you need to make a slight change or some adjustment here and there. Remember, the market is dynamic. You need to change your ways every now and then, keep improving. So avoid, when talking about the negativity bias or the euphoria. Euphoria is when you become too excited because you've won. Negativity bias because you've lost. You want to avoid that. So don't trade while you're emotional. Because trading while you're emotional, trading while you're emotional, that is wrong. Of course, the bad feeling when you lose, yes, of course, you've lost. You're not the first one to lose. Everyone loses in the market. The only thing you need to consider is, yes, you've lost today, but how much have you lost? All right? So that next time are you getting more than you're losing? So emotions will blur your mind. You won't be able to focus. You lose the objectivity in the market. You will even forget your trading strategy, and that's why you would want to start changing it. So how about whenever you win a trade and or you lost a trade, just get calm. Find a way of getting calm, and you find back your balance. Go back to your trading strategy. Focus on the long term. If you're losing, learn to accept profits and losses the same way. Again, I will repeat here that everyone loses in the market. Everyone gets a loss in the market or a profit. The big question is, when you lose, how much are you losing? Okay, that's one approach. The risk reward ratio. How much are you risking in the market? And when you lose, how much are you losing on the risk side? And when you get a profit, how much are you getting? That's one approach. You should target to have a bigger reward out of a smaller risk. And again, if we're not talking about the risk and reward, they need to be reasonable enough. Another approach, there we've talked about the risk reward, have a higher reward to the risk. Another approach is win-lose ratio, because they're different. So how much are you losing? How many times are you using? Sorry, how many times are you losing, and how many times are you getting your trades right? If you're a trader, maybe you have a lower risk, a lower reward to the risk, right? But you win more trades than you lose. It's another approach. Make sure you can, of course, have a more reward whichever way you choose. So control your emotions. You have a trading plan, okay? Whether you lose or gain, that's the nature of the market. Make sure you keep getting better in 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 your trading. Status quo buyers. So as a trader, you want to continue using the old strategies. Yes, it's the Bollinger Bands. You just know about the squeeze of the bands, waiting out for the breakout. How about trying to add in something else when the environment changes? Yes, of course, that one will work. And I've just selected Bollinger Bands randomly, right? That one will work. But how about keeping on improving on your trading strategy based on what is happening in the market? The markets are dynamic. What was happening in 2014 or 2016 or last year is not what is happening right now. So you need to adapt again to different market conditions, and that's going to guarantee you growth and profitability. Otherwise, you don't adopt, then of course you get caught up in a situation where you've been using your trading strategy over and over and over, but over time it's like you're no longer getting the consistent good profits you've been getting in the market. Things are changing, so you need to be dynamic as well. So one good way of trying to avoid this status quo bias is where, of course, you know the market sentiment. When are we on risk on? When are we on risk off environment? And we'll be speaking about this one into more details about the risk off, risk on. When do we have news, events happening up, so that you can understand about the volatility? And when you understand all these, then you need to tweak your trading strategy or try to readjust your trading strategy, your view on the market, your approach. You need to know that volatility can affect entry and exit levels. When the market is really very highly volatile, meaning that the prices can really deviate so much or can really move to by bigger margins, then of course you know that your stop loss levels you have to be wider. Or then if you don't have to readjust your stop loss levels and making them wider, then you need to retreat to financial instruments that are experiencing lower volatility as at that time of the market. So really important that you understand that the market is dynamic. You need to be keeping on improving to avoid the status quo. Don't maintain the status quo on your trading. The market is always changing. Now, here we are, choice of a broker, really very important. And you need to be trading with an undealing broker, regulated by the authorities. Here in Kenya, the authority we're speaking about is the Capital Markets Authority. And just to do this in just my own opinion, the best trade you will make is choosing the right broker, because it means you're protected. It means they're not dealing on your trading. They're just passing you through to the interbank market, right? Making sure that your trades are just very fast executed and you can make something out of the market. So again, consider the asset pool, a broker which offers you a wide asset pool. Talking about spreads here, and of course, you're taken care of here at EGM Securities because you offer low spreads. And of course, for the ones who want super low, scalpers in the house, are you here? Well, here's something for you. We have very low spreads for you on the executive account. Sorry, sorry, we have low spreads on the premier account. Again, to correct myself, very low spreads on the premier account. So that was just to mention, but I was talking about make sure you consider the broker that you're trading with should be favorable to you. Hassle-free deposit and withdrawal methods, very important. You don't want your money to be caught up in a trading platform that you can't get it, right? You want as transparent as possible. Deposit your money anytime, trade, get it out. Okay, it's your sweat, it's your skill, so you need to get it anytime you want, whether at night or whichever time. All right, very important. Trading platform, user friendly, like the FXPesa trader. Customer service, responsive, efficient, because in your trading you want to do it in the very easiest way when it comes to dealing with the platforms. Okay, so what is the action plan here? What is the call to action with all this presentation and about mistakes to avoid in forex trade? We talked about trading strategy. All those things. Make sure that you have a trading strategy. Make sure you can use stop loss and take profit. And third one, just to give in more details before you enter a trade, make sure you know where you're entering, where you'll be exiting. All right. Know the trend in the market, whether you're using your a trend following trader, whether you are using volatility. Make sure you understand the trend in the market, because it gives you an idea of where the multitudes are going. For example, do you need to flow with the multitudes? Do you need to go against them? But of course, if you have to go against them, you have to be really very particular and know the best levels and understand your strategy very well, right? Take reasonable risks in the market, and here we're talking about risk reward ratio. And this one will counter reward, will counter greed, it will counter feelings of emotions when you lose a big amount, because you know how much risk you're taking in the markets and how much reward you're looking up forward to. And on the reward side, it's always going to be guided on what profits you are expecting in the market based on um, your risk amount, because yes, you want to keep on gaining, and that's where greed comes in. You want to keep on gaining, but again, there is um, the movement in the markets that you want to follow. Don't don't really be greedy. Okay, don't be greedy. Target an amount that you know is reasonably good for you. Ladies and gentlemen, that's my presentation today. That's my um, can we call it few cents today. Now this is the time for you to ask questions in case you want to know something more. It's time for questions. Bring them on, type them on your screen. There's somewhere you have the questions panel. Just type them, let me look at them. Remember, this is running all the way from 2 to 3. I would like to hear from you what you would want to know more. Any questions you have, type them and we will look at them. Paul, you're asking, is there an automatic trailing stop option? Yes, you can use trailing stop. Okay, you can use trailing stop. That will help you to lock in profits, but make sure that you're locking in the profits after getting some reasonable movement, because sometimes you will lock in profits and then the price pulls back a little bit and you get the stop loss collecting something little for you just before the trend continues on the direction. So make sure as you're locking the profits using a trailing stop, it's at a reasonable movement. Maybe when your first target has been achieved, that would be better. Yes, Marcy, you're asking whether you can change your account from executive to premier. You can definitely do that. Make sure you speak to your account manager, or if you can't get hold of them, because sometimes they might be quite busy, maybe on phone or doing another task, just request to the support that you would want to change it and they can help you do it. Yes, whether you can trade it as low as $5 is very possible, but that is quite low. Make sure you want to keep on improving. But yes, you can trade it as low as $5 because FXPesa is really accommodative. You want me to explain more on scalping strategy? Well, I just mentioned what some traders will do in the market. Okay, but I'm not advising you to go and do that. But this is how traders would want to do sometimes. It's quite risky. If it's something you can do, well and good, go try it out, but not on a real account first. Do it on a demo. But people would want to pick out on the tops of the market and the bottoms of the market when you have the market on the overbought, right? Remember, you see overbought using the RSI, right? You want to check out the market on overbought from a higher time frame, then check out if it's overbought on a lower time frame, and of course they pick out a short position from there, right? And again, to scalp at the lows of the markets, and traders will check out on um, really oversold market structure using the RSI on a very high time frame, like daily, 4 hours, and if it's consistent there, they'll go and check out on lower time frames like 5 minutes and try to go long on that instrument. But again, that can be rewarding, but at the same time can punish you so much if that zone, if that occurrence doesn't happen, right? So it's something that should happen very fast. Make sure you can practice that one, but I'm not advising you to go use it. That's my opinion because you've asked. I've just mentioned what many traders will do. Okay, good question. Yes, we have physical classes, Saimo. If you're in Nakuru, visit us at Tower 1, third floor. We do them from Monday to Friday. If you're in Nairobi, we have classes happening there, right? Contact your account manager and speak with them. They will help you with more information about that. My opinion about robots trading and account management. Well, remember a robot is like an algorithm or a program. It's like a programmed way of opening your positions, right? The way you would normally use check out for a maybe crossover, and once the like few candlesticks close above or below a moving average, and then open a trade. So those instructions are given in terms of a program, and it opens the trades for you. And there's a risk management way that's also programmed there. Yeah, you can use trading. You can use robots or expert advisors, but make sure it's something you've tested. They work. Make sure it's something which is tested. Usually, you'll find that the best robots are quite pricey, okay, or really expensive. If you get hold of one, then you can use it as well, okay. But you need to monitor a robot. Never leave a robot unmonitored. You need to monitor a robot because sometimes it's a robot doesn't reason, just implements, it just removes the human element in your trading, and there are no emotions there. If there is a loss, it just continues to open another trade or hedge. So it removes the human element there. No emotions, can be very effective, but make sure you can monitor that robot. Keep on adjusting on the amount of risk in the market, or whether you want it to like hedge, how much are you allocating to that. Check out, make sure you can monitor it, but you can use it, of course, can give you good profits. But again, make sure you understand how to trade even before using that robot. At least you have an idea, know what it is. It'll be better for you. Change in volume while buying and selling, you can check out for the volume indicator, right? And sometimes you can check out on Bollinger Bands. They can show you changing volumes or reducing volatility, right? And you can exploit that. Marvin, good question. When you place a trade and just ends within 3 minutes, maybe before a trade ends in just 3 minutes, then what it means, if you're placing a trade and it ends in 3 minutes, means maybe you had put a stop loss too close and it was hit too early, right? That one is a challenge for the people who are trading on very low time frames like 5 minutes or 1 minute. You need to check out um, at least trade on a reasonably better time frame, or you not taking the profits early, okay. Or if you're losing within very few minutes, then maybe you're being stopped out, you're putting a very big risk in the market, and you just get stopped out very fast. So check out on how much lot size you're using, check out on which time frame you're trading on, and are you placing the stop loss at the right level. And even before that, do you really analyze the market to get the best entry levels to give you a profitable move? Check on those action points. Olga, can be better for you. Premium account, the difference between premium account and executive account. For the executive account, we have normal spreads, Okay, no commission there. For the premium account, you have very low spread, but again, there's an additional commissions there. Of course, that's the only thing that the broker gets. Okay, we are an undealing broker, right? So the only thing you're getting from your trading is just a very small spread. Very small spread. So when the spreads are reduced, then of course, whatever the broker is getting is also reduced. All right. So we add on a very small commission. Of course, it's not your interest to have the broker out of business. All right. You want to keep on getting profits, getting good rewards on your side, as well as the brokers getting some income out of it. Good question. How to use robots? It's very simple. There are so many robots listed on the MT4. Okay, the common MT4 vendors are there, but you know how to check out on the robots. Okay, make sure that there's low drawdown. Make sure there's, of course, it has been tested. There is a performance track record there. You can see the amount of money you need to deposit there. So once you get all that, just get the robot. There are directions given to you by the people who sell to you or the vendors. They will always give you directions on how you can install it. Most of the times you will install it, add it to your MT4, right? That will be on your is it the terminal, right? Is it on the terminal? Yeah, you add it on your terminal, and then not the terminal, you add it on the navigator, and you can always use it to trade. Can a trade go for more than 24 hours? Yes, of course, it can go for as long as you want. But you know that the market is open for 24 hours a day, 5 days a week. On the weekends, then it's time to rest. So just know that if the trade goes for more than 24 hours, then there is a swap. Okay, a swap can be positive on your side, or if it's positive on your side, you've been paid. That is if the position which you're holding, the currency which you had bought had higher interest rates than the one than the other one that you had sold, or you get it negative, you'll be the one paying, because the currency which you're holding on a buy has got lower interest rates. Okay, but yes, you can hold your trades for more than 24 hours. You're still new. Trade timings for the major currencies. I don't really get that. When we talk about timing, we have time frames, and time frames just represent the outlook you want to see in the market. Okay, so the timing is actually on your side. You can hold the trade for as long as you want, just like you've had me saying, Olga. But the time frames are there just to give you the outlook. You can open your trades and leave them for as long as you want, or close them within the shortest time possible you want to. You heard that there's a software that can trade for 24 hours without losses. Yes, it can be true. At the same time, it can be wrong. Remember, there might be marketing strategies just to get you buying that trading robot or expert advisor, or might be correct. It's something that you need to test, but it's very possible. But again, you have to monitor the robots. Most of the time, robots will make profits and losses. Okay, so there is no way to have, okay, there is a likelihood, but sometimes watch out for um, traps, or just announcement, or just marketing strategies aimed at getting you buy that product, and that's the end. Best time to trade, it depends. Okay, the market is open for 24 hours, 5 days a week. So the best time depends what is best for you, solely on you. But if you can find out, of course, you want to trade when you have big movement in the market. So if you can check out when there is high volatility, especially when there is overlapping of the markets, overlapping of the what we call them, various sessions in the market, then it can be better for you. Maybe check out when the markets are overlapping. The Tokyo session and Australian session are overlapping on when at the beginning of the London session around 12, 11, so around Is it 9, 10, 11 there of our time? And when the US session is opening, but usually the London session is quite volatile and very active. It's like the hub of the financial trading. Remember, it exists between the Asian side and the Western side, so it's really very volatile. Again, check out when the US session is opening. It's around 4 of our time, 3 to 4 of our time. And when the market is overlapping between 4 of our time all the way to 7, you can find very good moves because we have session open in London trading sessions open. That one means there's the whole of European region covered. And then, of course, the US, of course, US is it's like a very big, it's a superpower, right? So you find almost every region US dollars traded, and there you find a lot of volatility. Good questions. And you're asking about 1 hour time frame, whether it means that you'll be closing your trade every 1 hour. No, Ruth. When you're using the time frames, it just gives you the outlook of the market. If you want to get a view of where the prices were opening and closing, or the trend of the market in 1 hour outlook, that's why you put that 1 hour. If you want to see the trend of the market on a higher time frame, you go maybe to 4 hours, and you can see that how the price patterns have been forming, where the prices have been closing at in 4 hour intervals. That's what we're speaking about. So doesn't mean that the trade will be closing in that time which is specified in the time frame. That is just the outlook of the market that you're checking out for. You can place your trade in 4 hours time frame and get a profit within maybe 1 minute, and you can close it anytime you want. Another question here. When we have a session for trading strategies, good one. We always have these sessions. If you're in Nairobi, visit us at Delta Corner Towers, 12th floor, and we have those classes there. You learn a few strategies that you can use and directions on how you can trade. If you're in Nakuru, Tower 1, that floor, right? If you're in Nairobi, Delta Corner Towers, 12th floor. And you can even check out for our pre-recorded sessions online, and you can get more information, or go to YouTube, search for all of them. You can search for FXPesa training, and you can find out all those. All right, Samuel, the difference between buy stop and sell stop, or buy limit, sell limit, those are pending orders. When we talk about, so when you're placing a pending order, remember it's an order to buy or sell in the future. So a buy stop is when you're placing an order to buy in the future. You're placing an order for that order to open in the future, but at a price higher than where the current market is. That is buy stop, right? But when we talk about buy limit, is when you place a trade to be opened in the future at a lower price. That is buy limit. A sell stop is when you place a trade to open at a price which is lower than the current one. That is a sell stop, expecting the price to just open and proceed in that direction. But a sell limit is when you're expecting the price, expecting the price to keep on going lower, but after hitting certain high level, so it will open the sell order at a higher price than the current market price, right? But FXPesa platform is really very easy for you. You don't have to specify all that. You just go and specify the price that you want to buy at. It is just a button that once you click, it's written only buy when the rate reaches, and there you have the pending order placed for you, and it will be effected. So make use of the FXPesa platform. So about the differences between the premium account and the executive account. For the executive account, you have the normal spreads. For the premium account, you've got very low spread, but again, there's a small commission charged, right? Still, we have questions streaming in. You're in Kisumu. You want to know how you can get these classes. Please, I don't know whether you've registered with us. If you've not, just send the text join to 40184, and you can get registered with us. An account manager will be in contact with you and direct you on how you can get these classes. They will either send you recorded sessions, okay, for you to watch. And again, my advice is keep on attending these sessions and you learn more and more. All right, ladies and gentlemen, we've got so many questions. I've managed to answer all of them. Remember, this session runs from 2 to 3. It's already time, and up to that point, I'm really excited to be with you in this session. Next week, we'll be covering yet another topic on Thursday. So make sure you register just the same way you did, and we'll meet here, speak more about another exciting topic to get you even more insights and make you get better in your trading. Thank you so much. Till next time. Bye bye.